Hey boomers, this isn't good. These early months of Trump's second term have been marked by economic challenges and stock market declines, making it more difficult for anyone, including me, to even think about retiring. Let's break down the stock market under Donald Trump, or as I like to call it, from fireworks to fizzle, a tale of two terms. A saga, a novel, more of a pamphlet really, in 3 chapters. Chapter 1, the first term, beer, music, and denial. Trump's first term was like a frat party on Wall Street. Tax cuts were the kegs, deregulation was the DJ, and the stock market was that one guy doing a backflip off the roof. The corporate tax rates were slashed from 35 to 21%. The S&P 500 skyrocketed by nearly 67%. And the market responded like kids on Christmas morning. Investors were riding high, and anyone with a 401k was suddenly looking like they just hit the jackpot. Honey, pack your bags. We're retiring in Aruba.
Okay.
Then the COVID-19 pandemic crashed the party like the cops showing up at the front door of the frat house. But then Uncle Sam showed up and started throwing stimulus checks like dollar bills at a strip bar. Before you knew it, the market was back doing keg stands. Chapter 2, the second term, hangovers and headwinds. Now, we've just begun Trump 2.0, and it feels like the morning after. You have a splitting headache, and someone stole your shoes. We went from popping champagne to popping an acid. The S&P is in a downward spiral. In fact, all major stock market indexes just came off their worst day since June of 2020. Trump was president then, too. Now, because of the current tariffs, inflation acting like it owns the place, and the recession fears lurking around the corner, 401k accounts are looking like they've been on Ozempic. Yeah, they're looking a little under the weather. Some folks who were toasting early retirement are now staring at their accounts and like, well, maybe I'll just work another year or 10. The vibe on Wall Street, less Wolf of Wall Street and more cloudy with a chance of meatballs. Chapter 3, the road ahead. Now, why is the exit ramp closed? So what's next? Where do we go from here? Well, your 401k is basically locked into a roller coaster designed by a caffeine-fueled intern. Another market rally or a prolonged awkward phase? Trump might throw the market a lifeline. Another tax cut here, a deregulation there. Or he might just keep playing tariff roulette while the investors cower in the corner. Recession is still the elephant in the room, and the Fed is standing by with the rate hike hammer like a game of whack-a-mole. Meanwhile, geopolitical drama, global tensions, and supply chain issues are sitting in the corner like villains twirling their mustaches. So here's some advice from someone who in no way should be giving advice. Diversify. Or as Grandma used to say, don't put all your eggs in one overpriced stock, Tesla. Don't panic sell unless you enjoy locking in losses and explaining to your future self why you're working as a greeter in Walmart.
Welcome to Walmart. Get your shit and get out.
Stay the course. Unless that course is looking like the Titanic, then maybe quietly head for a lifeboat. Keep saving, because Social Security is looking like that unreliable friend who says, yeah, I'll help you move, and then shows up 3 hours late and drunk. And for Pete's sake, stop refreshing your retirement account daily. It's not a TikTok feed. It won't magically get better overnight. One thing's for sure. In this market, expect plot twists, surprise guest stars, and cliffhangers. It's the financial equivalent of a 1970s primetime soap opera. So, boomers, keep your seatbelt fastened.
Fasten your seatbelts. It's going to be a bumpy night.
Your investment strategy diversified, and don't panic. But if all else fails, there's always the lottery.